What's up? Good morning, everyone. A slight little delay here, some unresponsive pages on my computer, but it is what it is. I hope everyone's doing well, and we're coming back here. It's Tuesday, February 18th. It is the first day of a shorter week. We've only got 4 trading days this week, and this was due to President's Day yesterday, so markets were closed. Futures market closed early. There was 7 candles maybe on the S&P that printed. Otherwise, very limited movement. I don't really know that many people that traded yesterday, but it doesn't make sense anyways. Stock markets were closed. They're going to reopen today for the first time this week. And generally what happens with these moves is that we do see a slow grind to the upside swing. So this isn't necessarily going to be set in stone per se. It's not like, the expected low volatility grind higher is 100% on short weeks, but the probabilities are there. Generally speaking, we have about a 90 to 100 basis point expected move based on based on options data for this week. So that's not really much. Pretty much 1% of a move that's expected this week on the S&P. Fair enough. I do think that we finally tried to chug along towards those all-time highs with this current momentum that's happening right now. This is the nth test, if you will, of these high areas, 6160, 6143, without having a massive gap to start the week on a Sunday for the past, 3 weeks before that. So I am a little more optimistic of the potential of the upside. We'll talk about what that looks like in general, how we could look to play that out. But first and foremost, let's talk about some of the information that we've got going right now, which isn't anything crazy, I would say. We've got some news on OPEC here. OPEC and oil strategy in the current climate. It's not a necessarily easy thing to talk about. We talked about oil with our team last night, actually. I'm looking for that $70 marker to get long. I guess I was just a bit off. The low was $70.12. I know some people did get long last night, which is a fantastic $2 move. But fresh reports over the weekend suggest that OPEC Plus delegates were considering a delay in restoring output before they were denied by major producer Russia. While OPEC Plus members meet monthly to set quotas for crude production, there will be more on the table next time around, with oil recently giving up all its gains since the beginning of the year. What a strong start, what a crappy little turnaround. There is still the potential of a higher low into these auctions, but this monstrous range over the past, year and a bit now in oil is a bit concerning without the expansions above that $80 marker. So a promise by President Trump to drill, baby, drill will continue to see America produce more crude than any other country on record, while the threat of tariffs on global growth has also weighed on prices. It's despite new sanctions on nations like Iran and commitments by the U.S. to cut oil exports of the Islamic Republic, while many big countries like China and India are still getting their crude from shadow fleets, and members within OPEC Plus have pumped more than their official quotas in a test that can challenge the cartel's unity. So downside in oil puts downside pressure in inflation as well, which is one of the reasons you may assume that America is trying to push this further along. OPEC Plus is currently cutting 5.85 million barrels per day, which is about 5.7% of global supply. And in December, the group extended its largest cuts through the first quarter of 2025, and it marked the latest delay due to the weaker demand and an increasing outside supply. But some members are getting antsy, like the United Arab Emirates. It feels like it has done more of the heavy lifting amid a campaign for higher quotas, and any new delays could be met with resistance. So there's a lot of spare capacity that will be deployed into this market. We see from TD Wealth, right? They're talking about this, thinking that OPEC doesn't really want to do that because they know that a 10%, let's say, increase in supply would cause more than a percent reduction in price, which is not at all where they want to situate themselves, but it will be better on the inflation perspective in the medium term at least to see situations like that. And that would not necessarily be assertive for the revenue side for them, so I think that they're going to play it by ear, see how things go, and see if they can possibly balance the markets as best that they can. Now, in terms of this week, we've got a bunch of Fed speakers. That's number one. We've got an expected speech from Trump, I believe, today. We got the Fed meeting minutes that come out tomorrow in the afternoon. We got Fed Speaker Daly on the wire today at 10:20 a.m. Eastern. We've got Fed's bar at 1 p.m. Eastern time today. So we got a bunch of speakers that are going through this week on a short week. Generally, short weeks are met with lower volatility, slow grinds higher, and we're starting to see that kind of expansion both on the S&P and on the Nasdaq here over the last few sessions. Now, the Nasdaq is chugging along, honestly, not far from all-time highs at all right now. S&P's even closer, one might argue. But tech's resilience on this most recent rally, and I mean its resilience to not rally aggressively, is starting to be a bit of a concern where a bunch of these tech names need to start gathering themselves and start pulling back up, which I think is going to be the next move to get us upwards and beyond 6,200 here on the S&P 500 futures. That's not necessarily my weekly mark, right? If we talk about a 1% move overall, that would put us, where would that put us? Here, let me see. I believe like it should be above 6,200 or at least around 6,200. Yeah, like let's say, I don't even know, 1 second. A 1% move currently from the standing puts us around 62.20 or 62.15. I don't think it's a 1% move. I think they're counting in like 90 basis points, which is close enough, around 6,200 or so. But I think that the weekly general target is the beginning of an all-time high here. Right now, we do have some heaviness of volume, but we're expanding above 61 low 40s from last week's main trigger point and resistance. Currently battling with 6160 area, which is another tough point where markets failed from a prior Friday in the past. So my expectation is an initial pullback to gather the buy side from that mid to low 40. See if we can get that expansion from there. That's specifically what I'm looking at for the pullback and continuation on the S&P today. That's the only area that I really care about realistically going into today. I don't really want to trade any of the other regions. We'll see what happens.